Hi, can people hear me? A few nods. I must confess this is my first experience with these little headphones. Welcome to my kind of little living room. It's quite fun and cozy in here. And I'm sorry to wrestle you away first from Ian, who I think sounded like, although I couldn't hear it super clearly, was doing a really good job of teeing up the day, as he always does. I think it's fair to say, and this is probably a good thing, that we're definitely feeling reflective, given the state of the markets in general, the world in general, but also specifically what's happening with digital assets, or crypto as we like to call it. I'm not going to make out for a minute that there's any silver bullet, magic potion to getting through this, other than perhaps trying to master your emotions, retain equanimity in the face of both the ups and the downs, and how I've felt that translates into the process of business building and the process of working with business builders. And the other reflection I guess I have, I should get used to looking down here at this little cheat screen down here. The other reflection that I guess I would have is that when and we'll come back to this a little bit, I've been through a few ups and downs in terms of the overall macro picture. My first such experience was up through the dot-com boom, when I'd sort of built my first software company with my brother Charlie, who runs CogX in general, and we're extremely happy to be able to contribute this little kind of open, decentralized thread within it. We built that company, and as we'll see in a chart in a second, the prices of things went up incredibly high. And then they came down pretty fast. And at that point in time, I joined a US firm called Accel Partners that was coming into to Europe, which I think is an interesting separate topic about the division between Europe and the US in terms of availability of venture capital, but maybe we'll come back to that in a second. And there was an article in the Financial Times that they did really about Accel coming in, and not, I don't believe I featured even in terms of kind of being mentioned at all anywhere within it. But the theme of it was, despite everything, coming down in prices and the pace of things, reducing, that this is like your opportunity to do your winter training. It's your chance to do, as Daley Thompson used to say, that extra training session on Christmas Day when your opposition has decided to just give it a rest and eat some mince pies and Christmas pudding and the rest of it. It's in those moments, those darkest mornings, and those coldest days, when you can really try and steal a march on the competition, when you can have that focus. So if you can possibly think of it as an opportunity, and that's what I tried to do at that point in time when WorldCom and UNet and Enron and indeed ultimately 9/11 brought everything sort of crashing down, I think that's the way that we should push forward. So, okay, let's push forward now. By the way, we are going to beat the bear I don't think that's a well-known sort of 5-letter acronym. That's a new one, but everybody in the audience is probably pretty familiar with the other ones within the sort of decentralized crypto space. Everybody familiar with? Yes, okay, a few nods, yeah, exactly. So it's a nod to WAGBB and the rest of it. So this is already significantly out of date. Who can tell me what the Bitcoin price is right now? 20. Yeah, exactly. So I think that maybe illustrates quite how turbulent things are at the moment. And look, that's not out of kilter with what we've seen in previous drawdowns. And I guess a quick reflection on that is that, this is the first time we've had a technology wave where there has been a new asset class, or maybe a reinvention of all asset classes that is actually tightly tied into that technology wave itself. And it's tied into it you know, despite what some people might say, you know, it's not because people just want to speculate and stuff. It's tied into it because you can now, you know, connect the ownership and the involvement you have within a community to the value that can be attributed to the assets you hold in that community. You can build digital assets that are specific to communities and networks and marketplaces. And in order to make that work, in order to deliver on what is the kind of superpower of Web3, this ability to mobilize and coordinate people, to get people in the room when it's cold, to drive liquidity into these networks and marketplaces, you have to be able to list them. You have to make it possible to buy, you know, trade them so that the value can become apparent. And look, we're super early in that journey, but it's unavoidable that you then create an asset that has, you know, around which there's ability to speculate. You can't have one without the other. And there's a lot of work going on to continue to refine the whole nature of token engineering, the reflection of the true value that holders are delivering in a network, you know, to the value that you see in the market. And new inventions that introduce maybe less transitory value to tokens, ones that are actually not tradable at all, like soul-bound tokens. Some might have seen work on that, you know, how you bake reputation into tokens that stay with an individual. So, you know, we're just at the beginning of that level of innovation. And even then, if you compare the volatility, yes, it's very high compared to other asset classes. It's not entirely incomparable to some of the drawdown we've seen in the rest of the stock market in general. So we're not dismissing it. It's a real thing to cope with. But I just wanted to reflect upon the fact that it's kind of an essential part of what has been baked into the capabilities of Web3. And, you know, I guess it's also fair to say, and it's good to reflect on this when you're on an entrepreneurial journey, that you can become extremely fixated upon the specifics of your particular project. So, you know, when you start a company, you're told that the most important thing is to be focused extremely diligently on the success of that company, how you're going to craft the product, the team you're going to build, how you're going to take it to market, how you're going to work out how it will scale when you've taken it to market, how you build up, you know, moats of defensibility around it over time. But there are sometimes larger forces at work, and you have to be able to step back with the equanimity I was referring to and think about what is happening in the world at large. And I would say that you know, there's an unprecedentedly large number of times that the word unprecedented is being used in the press at the moment pertaining to what is going on. And I think we have to acknowledge that. And I think I'm not here to give you a kind of a news flash or to give you a lesson in macroeconomics, but these factors, the economic ones, the political ones, which to highlight include also the regulatory question within crypto, that is the uncertainty around how it will be dealt with in different spheres, and of course is going to be exacerbated by the issues that we've seen around stable coins. And you know, in Europe, there's been this question whether or not there should be more regulatory pressure and controls because of the issue pertaining to the environment. And that's something that the community has worked hard to see off. I personally think that this is something that is an overblown threat or an overblown challenge to the legitimacy of Bitcoin, because that actually all of the work that goes into to developing the systems that support proof of work for Bitcoin are predominantly around optimizing the supply to be from renewable sources, energy that is typically ring-fenced, and to make sure the systems are as energy efficient as possible, which in turn drives the efficiency of computer systems across the world in general. And I think if you did a broad analysis of the banking system and really took into account all of its impact on the environment and compared it to that of Bitcoin, it would actually come out quite favorably. So I think this is a red herring. Nonetheless, I think it is definitely the case that the industry would like to be regulated and wants to be proactive about doing that in an intelligent way that can allow for innovation to continue, but also protect folks who might be not as well informed as they should be about the risks that get involved, but also not to go against one of the core principles of, let's call it the Web3 movement, which is that these are open and permissionless systems that should democratize the access to participation in them and the benefits of owning a piece of these different digital networks. And so, we don't want to inhibit that either. And we actually have put together something that isn't launched yet, but it's called DAPA, Digital Asset Policy Alliance, with some of our kind of partners, not believing that we have the answer or that there will only be one answer or one work stream around this, but where we think that the best way to demonstrate that we can be part of the solution is to get up and start being proactive about it. And so I think we've spoken about some of the environmental questions, but obviously there's a knock-on of the political situation in terms of the supply chain around food in particular, and then a knock-on effect on commodity prices globally. So the situation is moving away from those kind of somewhat dramatic slides, is pretty dramatic. And personally speaking, I would have said that given that we're still all chattering about whether or not we've reached the bottom from an economic perspective or reached the bottom from a market or a crypto market perspective, I don't think we're really anywhere near the bottom, because normally people have stopped talking about that at the time of which you reach the bottom. And I think the chatter hasn't even reached a crescendo. Nonetheless, if we step back and look at the kind of the picture in terms of crypto prices over the longer term, I think that, and it is a longer term picture, obviously sort of decade plus, I think you can see that there's a cyclicality. And you can, some people would say that's connected to the Bitcoin halving, at least in part, or at least catalyzed by it. But generally speaking, the trend has been up and to the right, and that we can perhaps see that there's some reduction in the gap, the volatility between the highs and the lows. And from a venture perspective, that this is the time frames that we kind of think about. We are meant to be patient, diligent, long-term investors. We're meant to be there, supporting the entrepreneurs when things do get tough, either because things haven't worked out specifically in their project the way they expected to do, or if there's market, forces at work that, make life particularly tricky. And on top of that, either from a builder's perspective and thinking about, is this the right time to be trying to do something? And I've already commented, I think it can be a great opportunity to get your work in and build a project. Or from the perspective of investing, is this a great time to be deploying capital behind these talented founders? Our experience shows that that's the case. So, all of these different projects are ones that we have backed within, should we say, the lull in the prices back in the back end of 2018, 2019, early 2020. And, if you took them, and we haven't got the exact number here, but we did run them. If you take the overall performance of our 2017 fund and you take these particular investments, as a slice, they outperformed the fund in general, quite significantly. So there's a real opportunity for us to back great founders and for founders to build, great projects from those particular moments in time. So I think there's reason for optimism over that time frame, and actually. I'm not sure necessarily what this says, other than the fact that the NASDAQ peak in value was extraordinarily high back at the turn of the century. But certainly I personally have lived through some of those cycles, and this is referring to the companies that we built. So Charlie and I built OrcheStream together. Axel was the firm that I joined. Then we built another one in the face of the through the great financial crash of 2008. And then Firestarter is the firm that was Web 2 focused, that has evolved and morphed and ended up with the Fabric Ventures franchise that we're building today. So we've had our own journey through these ups and downs ourselves. And if we're sitting there thinking what it is that ultimately makes the difference between the projects that you want to back, that you want to work with, the people, the projects that are going to really make it through, that are going to make it, then it does come at the end of the day from a feeling you get with working with some of the founders. And one of them at least is sitting here in the audience, so I can feel very directly a reflection of that. It's you get a feeling working with the greatest founders of a balance between, and we have a kind of Plato and Aristotle up here in this picture, a balance between highly cerebral approach to working out what to do next, and something that is like gritty and built from experience. Kind of broadly, the kind of two schools of thought of Plato and Aristotle. You get an inner confidence about what, where they want to go and the decisions they want to make, and taking their own counsel. But you also get this humility and this openness to feedback and conversation. That you get, incredibly technical, capabilities and insight into the potential for technology, but you also get, a creativity and an ability to think laterally around, what you're going to do. And you get an ability to be extremely diligent and hardworking and serious, but generally speaking, and this is true in this particular case as well, an ability to be playful and to be to help us put together, for example, a five-a-side football match, which we did. So, I think, and you could go on, but I think it is those characteristics, those subtle characteristics that come from working with the people themselves that you're looking for. And I think also probably is a good way of thinking about how you want to seek to be yourself in these kind of challenging times. And the title here is how to cut through the clutter. And I guess the point is that equanimity, that balance that you can try and achieve in all of those different dimensions helps you try and make just marginally more good decisions than bad, and to try and not get distracted by all of the things that are going that you should not be getting distracted by, including your own emotions. The other thing that we do to try and focus on the things that will get us through and bring us through to success is, look, and this is there's always this sort of seesaw in the evolution of a sort of technology wave between the killer app that's going to take off next and is going to actually drive the success of the entire wave, and that originally might be, say, Bitcoin as digital gold, or it might be decentralized finance as the solution to getting rid of all those horrible bankers, or it might be NFTs as sort of a representation of art that is democratized and can maybe give people access to something that is personally interesting to them and drive great revenues for the auction houses. It's always the contemporary art with that freely available supply that does that. Or maybe it's let's go to the next step. It's profile pic NFTs that can represent our identity within the metaverse. And importantly, take with us characteristics of ourselves into the metaverse and allow us to transact from our Ethereum wallet attached to that identity, which is kind of the direction things are going. Anyway, we get excited about these applications, but then, of course, the market ebbs and flows, and we think, gosh, is it really going to play out the way we think it is? And the answer is, ultimately, all of those, I think, are great applications. And we may feel a little dismal about them now, but they'll all have a resurgence. But the other thing you can do is from an investment and from a building perspective, is to focus on the core building blocks, the components that are going to be required whichever application succeeds. So Argent which is indeed in our portfolio. Great entrepreneurial team led by Itamar, and they're building a smart contract-based wallet optimized for mobile and with low transaction costs and high throughput, and that's a great component that's going to really, whatever direction the application takes, is going to win out. And then Morales, which helps developers get into the still very complex area of Web3 app development, but with levels of abstraction that facilitate that. So whichever application they're building, developers are going to need ways of coming onboarding. So I think investing in the kind of the future, the roots of future success, building those things is going to be very important. So, why should such entrepreneurs work with us? So I thought on that basis, or to kind of try and answer that question, it was worthwhile reflecting upon how we think about our mission. So venture capitalists, I was going to say, has become a kind of a bit of a sort of dirty phrase, especially within the Web3 space. But maybe it's always been, it was, vulture capitalist is a kind of throwaway phrase that was used sort of a long time ago. Now look, I think personally venture capital is a very worthy pursuit because there's a lot of things you can do with your capital that are just about preserving it and covering your ass in case you lose any of it. Or you can actually try and optimize the system of allocating capital in risky ventures that have a chance of moving the world forward on a number of dimensions. So I think that's very worthwhile. And we started our kind of move into venture capital from a background of having built different companies, as you saw on an earlier slide, Orkstream and Tideway and so forth. And so we have a little bit of that builder DNA within us. And then on the other hand, we don't want to dismiss it, but being a venture capitalist, as you discover when you start becoming an angel investor or a seed investor or whatever, like any good space, is incredibly tough. A lot of people might look at it and say, hey, it looks pretty easy. People give you money, you give other people money, and then later it comes back to you, multiplied several times over. It's competitive, it's tough, there's many dimensions to it. Often your teams are quite tight and small, relatively speaking, so it's tough. And so we've taken those experiences, though, and adapted them for Web3. We've been inspired by one of the core words used within Web3, which is that these networks are all composed of different contributors who bring something to the table. They might be people who run nodes on the network. They might be people who are, serving in DAOs for sort of governance and dispute resolution. They might be people who are developing the, core public goods or developing applications. They might be people who are delivering capital and also doing some of those other things. It's a much more participatory, contribution-focused type of network that you build with a blurring of the lines. And so we thought that sort of venture contributor was a good way of summarizing that and thinking about it. And so that reflects, in many respects, our mission. And for us, that means that we can't, we shouldn't just sit back. We need to do the things that we've always done to try and contribute to what's going on in the space. And so here is a kind of a little teaser of the State of the Open Economy report that we've been building that's going to be coming out shortly. I was going to say it's around 150 pages at the moment, as if that's a good thing, but probably that means we need to do some hard work and get it down to about 100 pages. And we're doing that to try and synthesize it, and it focuses on a number of different topics. And I'm excited that you'll have an opportunity to get hold of it, and even more excited that you'll have an opportunity to give us feedback on it. And we did a couple of reports way back at the beginning of the last bear. And we hope now that we've scaled up a little bit as a firm, sort of 20 plus people, that we'll be able to kind of keep this up more consistently. So super excited about that. That's reflection of the building work that we've done historically. It's really understanding the market, trying to come halfway towards the entrepreneurs so that you can have a high bandwidth conversation about what it is that they're building. And then they can have confidence there might be the partner that you want. This clicker, this clicker was jumping ahead. There we go, here we go. And so, topics in there are like, how is games has been one of the areas that obviously has got great traction within Web3 recently. The play-to-earn phenomenon, now going through a little bit of a kind of a rethink, a reflection on how sustainable some of those economies are. I'm still optimistic that when you work on the game mechanics and you work on the in-game economies, that those are going to come out the other side. We had Alex Larson from Sky Mavis talk at our Investor Day on Monday, for example. And then and I think actually that the infrastructure being built around those games, the kind of app store equivalents and the way distribution is going to work and how you layer social engagement on top of those games is most likely going to lead to something even broader than just games. That may well lead to some really powerful app store equivalents for the Web3 world, or really powerful social media layers that will upturn today's TikTok, Instagram, and the rest of it. That's a very real prospect, and not just if you're Elon coming along and buying Twitter and maybe trying to decentralize that, which also could be a fun thing to do. Then developer tooling, we've talked about a little bit. We're also helping in that area through our FabricX program, really trying to invest in people. I'm going to be in danger of mentioning the same founder again because he's come through that program from the very earliest stages, backing people at the idea stage. We think that's crucial as well, and there's great opportunity for us and for them if we do that. And then we're also, although governance is quite possibly an organization of people, individual decision making is hard enough. Decision making by lots of people at the same time exponentially more challenging. The rewards from instantiating that into DAOs, where you can codify the rules of the game, and hopefully kind of optimize those systems for different types of DAOs around service provision, around expertise, around treasury management. There's a whole range of areas of innovation that are going on, but around finding jobs, for example. So all of those different things are very exciting, and we just saw there's a reflection on crypto Twitter, if you can find it, about sort of a discussion on what to do with an investor who the DAO felt had not delivered on their original stated contribution to the network, and whether or not they should be allowed to continue to participate. Anyway, there's fresh ground, new frontiers being pushed back in terms of how this should all kind of play out, and some really difficult decisions being made within the context of these DAOs. And I think that's a good thing. If it's all going to be plain sailing, we're probably not doing anything particularly innovative. And so people are probably thinking hard about how these constructs should work, and I'm optimistic they'll be a big part of the future. And if anybody's going to reflect, oh my God, it's looking dismal right now, I don't even believe that I want to take this moment to take a breath and build and build out my next venture, because how much future opportunity is there? The bottom line is that there's a proverbial herd of interest, of institutional investors, of talent, of app developers, of individual users who can participate in these new open, permissionless, more fair, more equitable, and ultimately more lucrative and benevolent networks. And that herd has only just started to come into play. We're just a couple, maybe less than 1% of the way through that process. So I think that the opportunity is as great as ever, and we will be knuckling down and trying to get philosophical about our decision making and how we spend our time, and we hope that you in the audience and you who might be listening afterwards do the same. And if you've got something exciting to talk to us about, then you can find us Twitter DMs or Telegram, or even better, loop Ian and I in together, and we'll make sure we get something done. Thanks very much for your time.